Mark Twain once said, reports of my death have been greatly exaggerated. And the same can be said for this economy. The news always more interested in disasters than positive stories, but more recently the focus has been on possible disasters while completely ignoring any good news. Now, the last couple of weeks has seen several misses on key economic data points, but also lots of positive data, including reports that have been better than Wall Street consensus. Case in point, yesterday. Well, May auto sales for 2019, their first monthly gain of the year, despite a string of predictions that industry was going to fall off a cliff last month. In fact, many big auto companies don't even post their internal numbers, but we did get numbers from the number 3, number 4 automakers. Toyota up 3.2%, Fiat up over 2%. You know, of course, the economy is cyclical and it will move lower, but I wonder if it will be reported properly instead of politicized. I'm very worried about the constant negative media and doomsday guessing on individual investors' efforts. And on that note, I want to bring in former J.P. Morgan Chase chief economist Anthony Chan. Anthony, thanks for coming in.
Glad to be here.
You're one of my top 5 economists. Okay, I don't know where you fit in there, but I love your work. I love your straightforwardness and the fact that you're apolitical.
That's right.
Where do you see the economy? Because there are obviously weak spots, but it also shows resolve that keeps surprising people.
I feel very good about the economy. We have very tight labor markets. We're going to get an employment report on Friday. I think it's going to be very good. I think we're going to probably get a number in the 175,000 gains for non-farm payroll. So I really see good stuff. Now, Charles, I've actually done research that actually forecasts when you're going to get a recession. And I look at that yield curve. There's a whole bunch of different versions, but I look at the 10 to 2 year,
right,
and I look at the index of leading economic indicators. When both of them flash recession signals, if you go as far back as the data will take you, it has a 100% track record. And right now, that 10 to 2 year is not inverted. The index of leading economic indicators has not dropped 3 consecutive months. And that usually tells us 11 months into the future to get a recession. I'm not getting those signals. So I'm feeling good about the economy over the next 11 months.
The inversion has been with the 3-month and the 10-year.
The 3 months to the 10-year, and of course the 10-year to the Fed funds rate. Those two have inverted slightly.
Right. But
that 10-year to 2-year has not, and neither has the index of leading economic indicators given you any recession signals.
The areas where there are weakness, for instance, housing, it's been a chronic problem. Is that something we should be concerned about, or is that telling us anything about the future, or is that mostly a rear-view looking thing?
Charles, the housing market slowed down for a simple reason that the Federal Reserve raised rates. That's an interest-sensitive sector. That's one of the first early sectors that actually feel that effect. And then, of course, the fact that housing prices have outpaced wages. At some point, a trend that's unsustainable doesn't last. That's the quote by Herbert Stein, chairman of the Council of Economic Advisors under Richard Nixon.
And I bet you some common sense person said it, too. And let me ask you about Jay Powell's comments this morning. My theory is that I'm telling you, I've listened to a lot of his speeches. He loves the fact that he believes it's the Federal Reserve that saved this country, that saved our economy. And I don't think he's going to let us go into a recession. At least he's going to try his best never to let it happen under his watch.
No, I think you're spot on, Charles. I mean, what we see is the Federal Reserve has 2 children. They have an employment mandate and they have a price mandate. And right now, they don't have to worry about the price mandate. That child can make it on its own. We have a core personal consumption deflator rising only 1.6% year over year. The target is 2%. And more importantly, they're telling you they may be moving to average inflation targeting. That is, if they continue to, they've undershot for so many years, they can go a little bit higher.
Right.
But even that is not an issue.
Right.
So for that reason, I think they're going to let it run a little hotter. And that's why Fed Chairman Powell feels very comfortable with really helping the economy if they see any sign of turbulence whatsoever. And he made that very clear today.
He really did. Anthony, thank you very much. Appreciate it.